Hi guys, today we're going to be looking at the double top, triple top and double bottom, triple bottom candlestick pattern or price pattern. Before we actually find any examples on the chart, let's have a look at the mechanics. Double top and triple top are very similar in how they work. The double bottom and triple bottom is just the opposite side of the trend. In a double top situation, you can see a market trending higher. It then fails to break the previous high, normally finding an area of resistance. You then have a neckline, which would be the low, and then you would be looking to trade this lower on the break of that neckline. The head and shoulders pattern, we'd be looking at taking the same distance from the top, projecting this from the neckline. In theory, this should be a bit higher, and then trading this down to here. Now, this can be used as a trade in itself, given that target I've just shown you, or it can be simply an entry into a trade. We can use this as a trigger. The triple top is exactly the same, but it finds even more resistance up at this level. You can see it finds resistance here, struggles to break through, creates a neckline, and then we trade this lower. And the same is true for double bottom and triple bottoms. Again, these are found at the bottom of a downtrend where there's found support. The market would then fail to break this low, and you would take it on the break of this neckline here. And exactly the same for the triple bottom. Here's one that I kind of started looking at. You can see this market's trending higher, broken these highs, higher, 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 low. We've then got this, some people call it the M pattern. I always like it, double top here. Fails to break this high, breaks this low, and then you can trade this lower. Let's find another example. Here you can see market is trending lower. It's creating lower lows, lower highs, and then it finds a bit of support around here. And then we've got, some people call this W, I call it a double bottom. And then as soon as it takes this level out, you trade this higher. And you can actually see in this example, it's come back and retested it and traded higher. A great way to trade these is to use them as entries. So you identify the underlying trend in a higher time frame. If we were to go to gold, for example, this is trending higher on the daily. If you were to go to a smaller time frame, you may well see potential opportunities. Here you can almost see you've got inverse head and shoulders. You could take on the trade here. Any opportunities to find like a double bottom, triple bottom, inverted head and shoulders would be a great opportunity to try and get into this trade. That's it for this video. I hope you enjoyed it, and I'll catch you next time.